Hey, welcome back. Last video I said one thing mattered more than anything else. 68k on the weekly close. Get back above it and the base case is back on track. Stay below it and we look towards 65k. Bitcoin closed the week back above it. We called it and now we're sitting around 70k with the weekly 200 EMA back below us where it belongs. For anyone who watched the last video and held their nerve through one of the most fearful weeks this market has seen in years, that's exactly how this was supposed to play out. But here's where it gets interesting because right now, one of the most well-known Bitcoin bulls on the planet, a guy who publicly projected Bitcoin hitting 250k this year, just said he wouldn't put a single dollar into Bitcoin right now. And honestly, his reasoning is worth understanding because it's not what you think. Let's start with the chart because the weekly picture just got a lot more interesting. The weekly 200 EMA is sitting around 68k. Bitcoin is now trading around 70k, roughly $1,300 above it. Reclaim matters. Last week, we were below it, the structure was broken, and the question was whether it was a fake out or a confirmed breakdown. The answer came in. Fake out. The bulls showed up, defended the level, and closed the week back above it. That's not a small thing. The weekly 200 EMA has acted as one of the most important structural levels throughout Bitcoin's entire history. Losing it briefly and then reclaiming it within the same weekly cycle is actually a historically constructive signal. It suggests the level is being respected as support rather than flipped to resistance. Now, let's be honest about the daily picture because it's still not clean. The daily 200 EMA is still sitting around 88k. We're roughly 21% below it. The daily trend is still pointing down. The overhead resistance hasn't gone anywhere and it's going to take a sustained move over weeks, not days, to even begin to close that gap. Anyone calling a full recovery on the basis of one weekly candle is getting ahead of themselves. What we have right now is this. The long-term weekly structure is intact and the most critical support level held. The short to medium-term daily trend is still bearish. Both of those things are true at the same time, and understanding the difference between them is what separates patient positioning from reactive trading. Levels to watch going forward. 68k remains the floor as long as we are holding above the weekly 200 EMA on a closing basis. The base case stays alive. 72k is the next meaningful resistance zone above us, and above that, the air pocket toward 80k is still sitting there with barely any supply in it. Here's what most people are missing right now. The chart reclaimed the level, yes, but one of the sharpest macro minds in the crypto space just told the world he's sitting on his hands. And understanding why actually tells you more about the next big move than the chart does. If you're trading these setups, I use Bitunix, clean execution, sold liquidity. Link is in the description, by the way. Now, fear and greed is at 15, still extreme fear territory, but it was at 8 last week, so we had a slight improvement in sentiment alongside the price recovering. Fear is fading slowly, that's consistent with what a bottom process tends to look like, not a sharp snap back to greed, just a gradual towing. Now, let's talk about Arthur Hayes, because this is the story that caught my attention this week, and I think it's being misread by most people. Hayes, the co-founder of BitMEX and one of the most followed macro thinkers in crypto, said publicly this week that if he had a dollar to invest right now, he would not put it into Bitcoin, he would wait. The reaction to that headline was predictably negative. People took it as a bearish signal from a Bitcoin bull. But read past the headline and his actual reasoning is very specific. He said he's waiting for the US Federal Reserve to loosen its monetary policy and start printing money again, which he believes becomes increasingly likely the longer the US-Iran conflict drags on. His view is that war tends to force the Fed's hand and that when the money printer turns back on, Bitcoin is going to move significantly. He still has 250k target for this year. So what's he actually saying? He's not bearish on Bitcoin. He's saying the timing isn't right yet because the macro catalyst he's waiting for, Fed liquidity, hasn't arrived. He's being patient and specific about his entry conditions. That's a disciplined macro investor waiting for the setup he wants. And here's the thing, the setup he's waiting for, that's not far away. The Fed's first rate cut is still priced in for mid-2026. The conflict Hayes is referencing is ongoing. If anything, his hesitancy is a roadmap. When the Fed signals a shift and liquidity starts to expand, that's when the next leg up has its real fuel behind it. We're not there yet, but we might not be far off either. On-chain, the picture is broadly unchanged from last week, which is actually reassuring given the price action we just went through. And the RVZ score is still sitting around around 0.4. We went through a period where the price briefly lost a major level. The fear gog hit 8, and yet MVRV didn't spike into any kind of danger zone. That tells you the market wasn't carrying the kind of over-leveraged positioning that leads to a cascade. The correction we saw was driven by sentiment and macro pressure, not by a structurally broken on-chain picture. The roughly 400k Bitcoin accumulated in 60k to 70k range is still sitting there as a cost basis support zone. Those holders didn't panic sell when we flipped below the weekly 200 EMA. That's constructive. There's a minor supply note worth mentioning this week. South Korean prosecutors sold around 320 Bitcoin, roughly 21 million worth, and that had been recovered after a phishing attack on government custody. They sold it in small batches over 11 days to avoid disrupting the market. That's about as responsible as government Bitcoin selling gets, and $21 million is a rounding error that context of weekly ETF flows. That doesn't change anything structurally, just worth knowing it happened. Now let's talk about if you're sizing into any of these levels. Bitcoin is what I use for execution, easy to set up, good for managing entries when you have a plan behind the trade. Link is in the description, by the way. Now the macro backdrop is where the real story of the next few weeks is going to be written. The DXY is still elevated around 99. The US-Iran situation hasn't resolved, and the safe haven demand for the dollar is still applying pressure to risk assets. Bitcoin recovering to 70k despite a strong dollar is actually a reasonably bullish data point. It suggests the underlying demand is strong enough to push back against the macro headwind. But the more important macro question right now is the one Hayes is asking. When does the Fed pivot? And when it does, what happens to Bitcoin? Here's the framework I keep coming back to. Global liquidity, the total amount of money available in the financial system, and Bitcoin's price have had a tight relationship over multiple cycles. When liquidity expands, Bitcoin tends to benefit significantly. We're currently in a period of relative tightness. Rate cuts haven't started yet. QE isn't happening. The dollar is strong. But the direction of travel is shifting. Every week that passes without a financial crisis getting worse is a week closer to the Fed moving. Every uptick in unemployment or downtick in economic data puts more pressure on them to act. The first cut at mid-2026 is the base case, and if the Iran situation causes enough economic disruption, Hayes' thesis that the Fed moves aggressively starts to look more plausible. That's the macro setup sitting in the background. Bitcoin has reclaimed its key level, fear is still elevated, and the liquidity catalyst that Hayes and others are waiting for is moving closer. We just don't know exactly when it arrives. Before I wrap up, if you just want solid tools for when the catalyst does show up, BitUnix is linked in the description, worth having set up before you need it. Here's where I am. Last week I trimmed when we lost 68k. This week I've been adding back gradually, not all at once. The weekly 200 EMA reclaim is exactly the signal I said I'd be looking for to start rebuilding exposure. The plan from last video said that, and the plan is what I'm looking for. I'm not fully back to my previous position size yet. I want to see a few more weekly closes above 68k before I'm fully committed again. One candle is a good sign. 2 or 3 starts to look like a trend. My base case hasn't changed. Weekly 200 EMA holds, we work towards 72k and throughout the air pocket toward 80k. Hayes' thesis gives that move a potential accelerant. If the Fed signals a shift in the coming weeks, that could be the catalyst that turns a slow grind into something faster. Risk case, we lose 68k again on a weekly close. That would mean this reclaim was a dead cat bounce rather than a genuine recovery. I'd stream again and wait for more data. That scenario becomes likely the more weeks we close above the level, but it's not off the table yet. The key levels haven't changed. 68k is still the floor to watch. 72k is the next resistance, and somewhere in the background the Fed is sitting on a decision that's going to matter more to Bitcoin's next big move than anything on chart right now. Arthur Hayes is waiting for that moment, so am I, just with a position already on. We will track this week by week. Drop your thoughts in the comments. See you in the next one, by the way.